Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 1st of November to Friday the 5th of November 2021. We've written up the weekly flows to get us underway then, so for that period, then the 1st to the 5th, Euro dollar plus 8. So over that period, the Euro dollar as an FX pair gained 8 points or pips, Euro yen minus 72, Euro pound plus 122, pound dollar minus 189, pound yen minus 304, and the dollar yen minus 67. If you plug that into the formula, then you get a negative unopposed driver in the pound at minus 615, no backdoor flows, the opposing positive flows mainly going into the yen at plus 443, into the dollar at plus 114, and the euro is the positive rock at plus 58, activity plus or minus 615. So during the week then, really after the MPC Bank of England rates decision, the pound has been soft and it's been negatively driving and ramming positive flows down the throat of the yen and the dollar, and to a lesser extent the euro. So we'll stop it there and we'll write up the asset classes and carry on. Right, we've written up the asset classes then. So US dollar index, big pump up previously, came back down, it's now coming back up, was at the highs, sort of had a treble top-ish. It's 0.14 from the high, 14% off the high, so US dollar pretty strong. Gold half marks, has been messing around, but it's starting to show signs of life now, which is interesting. Normally that would suggest a weaker dollar. Anyway, we'll talk about that later. Oil, big break, came off, it's now had a little bounce back up. It's 0.20 from the high, 20% from the modelled high. Wall Street, S&P Tech, they've all got the same look. They did a big break and they're at or near their high. So Wall Street is 0.15 from the resistance, broken 15%, S&P 20%, and Tech plus 20% on the resistance. So the S&P and the Tech are in lockstep, and Wall Street is slightly lagging now. So that's interesting. US 10-year in the bund. Previously, big pump down in price, rising yields, and then this big bounce in price, falling yields. So US 10-year is now at half marks, 0.5, and the bund is even higher on the price. So it's 0.29 from the high. So relatively speaking, the bund price has bounced higher than the US 10-year. Therefore, the bund yields have come off relatively more than the US 10-year, but generally they've all come off a lot in yields. So that's interesting when you've got this strong dollar and strong gold. So you got divergence there. Right, copper basically did a big break, came back. It's now 0.40 from the floor, so it's below half marks, still chopping about. US steel is half marks now. It's been messing about for a long time and it's now half marks. So what we'll do is we'll stop that there and then we'll write up the data cycle and then do the final analysis for the week ahead. Right, we've written up the data cycle then. So China's neutral to slightly positive. The dollar's neutral to a bit more positive. Germany's neutral to negative. Euro's neutral. Yen's neutral. Pound's neutral to negative. CAD's neutral to positive. AUD's neutral. NZD's neutral to positive. And the Swiss is neutral to positive. So we've got basically a lot of neutrality in the data cycle. Nobody's really sort of pushing on, and arguably the strongest of the bunch, but it's only marginal, is the New Zealand dollar in terms of the data cycle. So that's where we are there. And if we just grab this, right. So to remind you of the flows, then. So the weekly flows we've had this pound weakness driving positive flows into the yen predominantly, and the dollar next, and then the euro after that. Last week, just to remind you, which was the 25th of the 10th to the 29th of the 10th, we had the dollar positively driving, so we had dollar strength last week. yen was the rock at plus 23, the pound was minus 68, and the euro was weak at minus 147. So we had dollar strength last week. This week we've got pound weakness to the exclusion of everything else. So what's been knocking it about? Well, we've had positive NFP, positive ADP, and we've obviously had all the Fed stuff as well, and it's been a busy week on data. And really we've got light data coming through next week, Monday and Tuesday. It doesn't really start getting going again until Wednesday the 10th. So we've got this window of light data. Thursday's American holiday as well. So that's something to bear in mind. So and Friday's no great shakes on the data. So next week is light in terms of data noise. Right. Well, let's just chop all this in then. So dollar, euro, yen, pound, CAD, AUD, NZD, Swiss. They're the 8 main complexes that we deal with. Right. So the dollar is pretty strong in terms of the dollar index, but 10-year yields are half marks, suggesting that the bond market thinks that the long-term trajectory of the dollar will be softening. The yen has been pumped off the back of so we've got equities that are at or near highs. So that's one thing. And normally you would get a negative yen transmission. So you get yen weakness and equity strength, and that's not what's happening at the moment. And the reason being is that the pound has been sold off pretty much relentlessly, and we've got this negative driver in the pound ramming positive flows into the yen, whether it likes it or not, and it's ramming positive. So basically, the pound is propping up the yen, and it's also propping up the dollar, and the euro's sort of piggy in the middle there. So that's what's really going on in terms of the flow cycle. And if you look at the commodity currencies as well, you'll find that they're subdued as well because the overall flow structure has been unhinged really by this pound sell-off. Now, what's going to happen next week? As I say, we've got this light data. The likelihood is we've got this window. There's no real reason for equities, this rally in equities to fade or stop. So the likelihood is you're going to get an strong equity rally into next week, Monday, Tuesday particularly. There's nothing really to hold it back, and then depending on what, it all really revolves around if they carry on selling the pound, which is a possibility, then you're still going to get this resistance to the yen dropping, and the dollar's going to be propped as well. So really it revolves around the pound, because that's what's driving the flows. So if the market wants to take the pound down lower Monday, Tuesday, then you're going to get equities rising and similar flows here. You're going to get bit of yen strength and dollar strength, and euro neutrality. But eventually, this issue will fade. And if you look at the where are we? If you look at Friday's flows, you can see that the yen was the positive unopposed driver. So the yen was sort of maxed out on Friday. So there's a good chance we're going to see a reversal in the yen. So we're going to be looking out for a reversal in the yen, a softer yen with a positive equities, going back to the usual equity transmission. If you get a softer yen, you're going to likely get a softer dollar. So you're going to get this sort of part of the equation. You're going to get yen negative, dollar negative, and then you're going to get a positive euro and a positive pound. So the chances are this isn't really going to help. This situation is going to rotate basically. So it's going to help the pound, and the yen's going to come off. And normally, as I say, in a risk-on equity drive, the yen would be pretty soft. And the only reason it isn't is because of this unrelenting pound weakness. So to sum up then, we've got this data window Monday and Tuesday. If they carry on keeping the pound soft, then the yen's likely to stay strong, and as is the dollar. As soon as this pound starts to come off, then the yen's going to drop off a cliff, and that's going to give another boost to equities. And so the likelihood is you're going to see a big ramp up in equities early next week, and maybe for the whole week, depending on how we go. And the commodity currencies are obviously going to be dragged upwards with that, and the yen's going to start really selling off and giving a sort of partying like 1999 feel. But so that's where we are. And if you get a weaker dollar, oil is likely to recover as well. And gold's already showing signs that it wants to ramp up. So that's where we are. I hope that was useful. Nothing tomorrow. It's Sunday. Monday is the usual daily briefing. So thanks for watching. Goodbye.